This Week in Economics on the 17th of February 2019 from WBRN Radio and on the Bostonred Network. This is the Numbers Man section of the Bostonred Network. We have a number of stories here. We'll start the highlights. At the end, we have an interview for NBC with Charlie Munger, the other half of Warren Buffett's team at Berkshire Hathaway. Charlie Munger talks about a variety of issues, including quantitative easing, the flight of the rich, as he calls it, from New York, Connecticut, and California. Very interesting scenario he has, and why the higher tax states, as he terms them, these people are fleeing, I should say. And other machinations he's had. He's 95 years old, so he's obviously one to make those kinds of machinations. Let me just go over what we're going to be doing here today. We'll talk about automobile loans. Now, this is from the Federal Reserve Bank of New York and from the Bureau of Statistics. This was released on the 12th of February. Job openings and labor turnover, that would be for December. And let's see, from Reuters, U.S. corporations recession rises as a risk of it, I should say, as earning outlooks dim. There's been much talked about that. Industrial production and capacity utilization, G17. This is a release from the Board of Governors of the Federal Reserve. That was on the 15th of February. Chance of a U.S. recession up. Numbers Fed hikes down from Reuters. That was on the 14th. U.S. shale executives predict oil production constraints remain. Some of the topics we'll be looking at here. And the Trump wall and his executive order. We already talked about Charlie Munger and the CNBC interview that he gave. We'll get to that in a minute here. And the Producer Price Index that was released on the 14th. That's from the Bureau of Labor Statistics. First of all, let's start out here with the Payless Shoe Source. They are going to liquidate their stores starting on in the U.S. in Puerto Rico, winding down their operation. They will start out on the 17th, well, actually today. And they will wind down that operation. So for the consumer and keeping the eye on the ball, that is one of the places to look at. Be open until the end of March, and the majority will remain open until May. So they evidently have a lot of inventory to release. That's the Payless source. And we'll now go to the let's see, we'll go to the Census Bureau. A story on them. This is privacy data lapses discovered in 2010. The census, incidentally, is conducted every 10 years. So the last time around was 2010. And internal team at the Census Bureau found basic personal information collected from 100 million Americans during the 2010 head count could be reconstructed from obscure data, but with a lot of mistakes. The top agency said the age, gender, location, and race, ethnicity for 138 million people were potentially vulnerable. So far, however, only internal hacking teams have discovered such details as possible risks, and no outstanding groups are known to have gobbed up the data intended to remain private for 72 years. That is from the chief scientist, John Abo. The Census Bureau is scraping its old data scrapping. I'm sorry, I was thinking of something else here. Anyway, scraping is when you actually take the data out from the state-of-the-art method that Abode claims is better than Google's. Some former agency chiefs fear the potential privacy problems will add to the worries that people have in avoiding answering or lying on the once every 10-year survey. The Trump administration attempt to add even a much debated citizenship question that is going to the court. The Supreme Court announced it would rule on the proposed question, which has been criticized for being politically not properly tested. The census has been going on for many, many years, and it is a head count of every person within the United States. You don't have to be a citizen, you just have to be a person, period. And that's how the monies are distributed. Federal monies, House of Representatives is appropriate, representation is allocated. The 8 billion pieces of statistics in the census data are supposed to be jumbled in a way so that what is released publicly for research cannot identify individuals more than 7 decades. In 2010, the Census Bureau did this by swapping similar household information from one city to another, according to Duke University's Professor Jerome Ritter. The internal questions, Abode said, officials were able to match 45% of the people who answered the 2010 census with information from public. And now this is one thing here, public and commercial data. They use these information credit bureau things. That's not unusual. That is part of your Homeland Security checks, etc., that are used to verify a person's identity if they have obviously a credit a record. That is one of the what's called markers that they use. Anyway, nonetheless, but errors in this technique meant that only data for 55 million people could be completely correct. Little more than 1 in 6 of the U.S. population. Now they use Facebook. This is becoming more and more of a general method of using social media and other things to identify people. It said the 2010 census used the best possible privacy protection available, but hackers since then have become more skilled in reconstructing data. To counter this growing ability, the agency has completely changed the system for 2020 that will offer a gold standard of privacy regardless of the faith of the citizenship question. People want to know that statistical tables aren't going to come back and haunt them. And then he was speaking to the American Association for the Advancement of Science. I promise the American people they will have the privacy that they deserve. Georgetown provost Robert Groves, who headed the 2010 census, said the count had the proper privacy and that every census improves, and he, of course, a lot of the changes. The former agency chief, Kenneth Pruitt, a professor of policy at Columbia University, said the basic information such as sex, age and ethnicity, even if publicly revealed, isn't as big a deal as other data breaches. No doubt about that. They're not giving out Social Security numbers, etc. There's widespread privacy anxiety out there that is very much related to Facebook and Google and so forth. Pruitt said, I much more worry about the fact that my iPhone follows me around every day, and that data can be released. Apple's Fred Swintz took issue with such privacy concerns. The iPhone doesn't follow you around all day. Well, with geo-positioning, could follow you around, and Apple doesn't sell the information, he says, to other companies. Abode said that the 2020 census will be the safest ever produced. All of them are safer because better techniques. The new system involves complex mathematical algorithms to inject noise into the data, making it harder to get an accurate information, providing a very strong guarantee of privacy. That is from a Duke University professor of computer science, Aswan. I won't try to pronounce his last name. The increased privacy while lowering the accuracy for researchers who use the statistics. Think of it as one set of knobs being dialed up while the second is dialing down at the same time. Counterbalancing, the Census Bureau tried this system in a 2018 survey using ultra-strict privacy settings. While not directly compatible to Google or Apple, it's 100, if not 1,000 times more secure for privacy. Pruitt suggested that the public might not understand the extra efforts is underway for the 2020 count, but could be spooked by the disclosure of this. And this is why we are reporting it here. The administration succeeded in adding this. If it succeeds in adding the citizenship question, there will be a huge evasion, and select misuse of it. Pruitt said, whoever some avoid the survey because of it or lie to it is a good outcome, making the data less useful. Grove said the technical experts have serious problems with the citizenship question because it hasn't been tested in the field, and all census questions usually are. Yes, they are. And comparing it to putting a new drug on the market before testing it, and wind this up, very subtle wording and possible changes is a thing like the census can have erroneous impacts way beyond what humans have predicted. There's no doubt about this, and this is why we put this question here. Let's go. We'll go to the total household data increased modestly by 32 million in Q4 of 2018. That's according to the quarterly report on household data and credit from the New York Fed Center for Macro Economics this week. Although household debt balance has been rising since the mid 2013, and their sluggish growth in the fourth quarter was mainly due to flattening in the growth of mortgage balances. Auto loans, which have been climbing at a steady chip since 2011, increased by 9 billion, boosted by historic strong levels of newly originated loans. In fact, 2018 marked the highest level of the 19-year history of the origination date, with 584 billion in new auto loans and leases appearing on credit reports, up in nominal terms from 2017 of 568 billion. In the past, we took a closer look using the Fed after years of growth among borrowers across the credit score spectrum. The 2018 strength in auto loans was primarily driven by those originated for the most creditworthy individuals, while originations with scores below 720 had leveled off, abated at a high volume. The high volume of prime originations have caused a shift in outstanding pool of auto loans, and the fourth quarter 2018, 30% of the 1.27 trillion in outstanding debt was originated by borrowers with borrowers with credit scores above 760. Meanwhile, the share of total auto loans outstanding originated by subprime borrowers were at 22%. In fact, those percentages were suggested that the overall auto loan stock is the highest quality it has had been observed since the data began in 2000, so that would be roughly 19 years ago. Loan performance sliding, but slowly. The overall performance of auto loans has been slowly worsening despite an increase in the share of prime loans in the stock. The flow is seriously delinquent into seriously delinquency that become 90 plus days of delinquencies in the fourth quarter crept up 2.4%, substantially above the 1.5% seen in 2012. And let me finish this up here. This is about the chart. I'll put this on repayment by age, shifting and looking at performance by the age of borrowers. Some increased trends emerge, age-based flow into serious delinquencies in the quarterly report. Reproduced here the performance of loans held by borrowers under 30 years of age between 2004 and 2016. Meanwhile, delinquencies in loans held by borrowers over 30 have crept up slightly. Now, worsening of under 30 and over 30, just to take away there. The surging auto loan industry has been on the radar for more than 5 years now, but at the level of loan origination has been commensurate with auto sales, which a study of 50 to 60% of financing shares combined new and used vehicles purchases. A percentage surprisingly stable is our sample period, which suggests that auto loans have been tracking growth even in the automobile sector, motor vehicle sector. Amongst the rising overall delinquencies, rates remain below the 2010. Well, of course, that was in the Depression peak. There were 7 million Americans with auto loans that were more than delinquency at the end of 2016 or 18. Excuse me. The rates were worse since the automotive loans are now more pervasive. The substantial and growing number of distressed borrowers suggests that not all Americans have benefited from the strong labor market. The warrants continue monitoring and analysis here. They're talking about, and this is. Let me just check one thing here. The quarter report itself, which I've been looking for there, and we'll actually get it. And this is probably what I will append. I was unfortunate. This is the Center for Macro Economic Data at the New York Fed, and I was dealing with very, very fine print there. I'm sorry about that. This I can amplify, and probably the aggregate household debt balance ticked up in fourth quarter of 2018 for 18 consecutive quarters, and is now at 869 billion. However, in the previous, this is Q4, 6.9% higher than the previous Q3, excuse me, peak of 12.68 trillion as of December 31st. The total household indebtedness was at 13.54 trillion, a 32 billion or 0.2% increase from Q3. Overall household debt level is now 21%, 21.4 above the 2013 Q2. Mortgage balance on consumer credit reports in December 31st stood at 9.1 trillion, essentially unchanged from the third quarter. Balances on home equity loans, the credit continued their declining trend from 2009, with a drop of $10 billion in the fourth quarter, with auto loans increasing by $9 billion. Credit card balances going up 26 billion, and a student loan, and we look at this very, very closely, at 15 billion. The increase on credit card balance is consistent with seasonal patterns, but marks the first time credit card balance retouched the 2008 peaks. That was the start of the Depression. Balances now stand at 870 billion. Mortgage balances on consumer credit. Sorry about that. New extensions of credit for mortgages and auto loans slowed in Q4. Mortgage originations, we won't get that because we already talked about that. Housing debt, there was 104 billion in newly originated mortgage debt in the fourth quarter of 2018. Mortgage delinquencies were flat at 1.1% of balance 90 days or more delinquent in 2018 quarter Q3. Delinquencies transition rates were mixed, about 1% of current balance transitioning to delinquency. Student loans, outstanding student loans stood at 1.46 trillion in Q4. That was up 15 billion. So when you hear Alexander Ocasio-Cortez and others talk about student loans, Bernie Sanders, there's a problem. 11.4% of aggregated student loan debt was 90 days delinquent or in default in 2008, Q4 2008. Small improvements from the jump seen in the third quarter. Transitioning into delinquency was unchanged. Accounts closing, credit inquiries, and collections. The number of credit inquiries within the past 6 months, an indication of consumer demand, declined to the lowest level seen in the history of the data. Account closings were at the highest level. So this in itself is an indispensable report, and we will append it with its charts, etc. Nonetheless, we'll go to well, just a minute here. I may have messed up. Well, maybe not. Okay. I have to have something to append. This is released on the 12th of February 2019. Job openings and labor turnovers for December of 2018. The number of job openings reached a series high of 7.3 billion on the last day of business of December. The Bureau of Labor Statistics reported today. Over the month, hires and separations were little changed at 5.9 million and 5.5 million respectively. In separations, the quits rate was unchanged at 2.3%. In layoffs and discharge rate was little changed at 1.1. The report includes an estimate of the number of job openings, hires, and separations there. Job openings, as of the last day of December, job openings reached a high of 7.3 million. The opening rate was 4.7%, and the number of jobs openings edged up for total private at 98,000. Little change there. Job openings increased in a number of industries, with the largest increases in construction at 88,000, accommodations and food services at 84,000, healthcare and social assistance at 79,000. Job openings decreased in a number of industries, with the largest decrease in non-durable goods manufacturing, a negative 37,000, the federal government a negative 32,000, real estate and rental leasing a negative 31,000. Job openings little changed in the other four. Hires, the number of hires little changed at 5.9 million in December. The hires rate was 3.9%. The hires level was little change for total private and government. Hires increased in retail trade at 126,000. Education 19,000. Mining and lodging at 9,000. Hiring decreased in information at 22,000. In the federal government at negative 10,000. The number of hires increased in the Midwest region. Separations, including quits, layoffs, discharges, etc. Quits were generally voluntary anyway. The total number of separations was little changed at 5.5 million in December. The total number of the separation rate at 3.7. The quits was little changed in December at 3.5 million. The quits rate was 2.3%. The level was a little changed for private, but decreased for government at a negative 18,000. Quits increased in professional businesses services at 60,000. Healthcare and social assistance at 49,000. Quits decreased in industries with large decrease in other services. The number of quits was a little in the four regions. Layoffs and discharges in December at 1.7 million. Layoffs and discharge rate was 1.1%. Layoff and discharge rate was little change for private and government. Layoff discharge rates in retail very, very high at 56,000. In the federal government at 4,000. Number of layoffs and discharge little changed in the four regions. Number of separations 50,000 in December. The other separation level also edged up in private at 47,000. Increase in professional services at 23,000. Healthcare at 21,000. And other services at 15,000 there. Net change in employment. Large numbers of hires and separations occur each month throughout the business cycle. That's an exclamation more than anything else. As part of the annual process, the January 2019 data released will be released on March 15th. And this is a better explanation here of job openings, etc. And I believe it's in the 1,000. If we look at this year, we'll just look at manufacturing here. There were 374,000 in December of 2017, and there were 495,000 in November of 2018, and in December of 2018 there were 28,000 job openings. And hires, we'll give an example here. In December of 2017 there were 348,000. In November of 2018 there were 377,000, and that dropped to wait a minute here. The figures I was with manufacturing, there were 352,000 in December. That's in manufacturing, one of the big sectors here. We're not going over all these sectors because we're going to impinge these, and it would go down to, hopefully we've not lost healthcare here. Healthcare and social assistance, $1,023,000, that would have been in 2017. $138,000 in the next year, and finally in December, I believe that's the third column. Oops, I got to get back to it here. 1,216,000. So you can see this was Going down a bit here. Yeah, third column is December. And if we look at government, it's going to be a little bit more dismal there. 526,000 and be 657,628,000 there. This is in government. The job openings in December, but again, the number of hires the federal government 49,000 and 39,000 in December. I won't go on with this because this is the Board of Governors again. Industrial production and capacity utilization. And this is not a PDF, unfortunately. Anyway, industrial production declined 0.6% in January after rising 0.1% in December. In January, manufacturing production fell 0.9%, primarily as a result of a large drop in motor vehicle assembly. Factory output, excluding motor vehicles and parts, decreased 0.2%, and the index for mining utilities moved up 0.1% and 0.4% respectively, at 109.4% of its 2012 average. Total industrial production was 3.8% higher in January than a year earlier. Capacity utilization of industry sections decreased 0.6% in January to 78%, a rate that is 1.6% below its long run. Now that was from 1972 to 2008, the average there. And let me just go to a PDF here. Okay. So if we look at a summary of industrial production, the index 109.8, that would have been in August of 2018. And if we go to December, it was at 110.1, and January 109.4 there. And then major market groups, we can look at consumer goods in December at 106.3. In January of this year, it was at 105.6. That is final product consumer goods at 105.6 in January. Business equipment at 102.2 temps. And construction at 117.1. That was January of this year, and it was at 117.6 in December of last year, up slightly. And we will append this on, so I'm just highlighting just a few things here. This data is released as a preliminary estimate of industrial capacity for 2019, measuring from the fourth quarter to fourth quarter. This is just an explanation of what is going on here. And the revision of industrial production and capacity utilization will be on March the 27th, so you will get that, and we'll just move on. From Reuters, the chance of a U.S. recession moves up, the number of Fed hikes down. Well, that tells you sort of a story there. There is a 1 in 4 chance, that's 25% of a recession, given a global economic slowdown. And what that basically means is this. In economics, Charlie Munger will talk about this. A lot of things are unforeseen, obviously, but trends tend to be more negative than positive. Now, that is a lot of that is dependent upon the psychology of the market. We spent a lot of time during the Obama era talking about the psychology of the market. It was different at that time because the commercial press, the business press, pundits, majority, not all, were talking down the economy. Such things as health care would vanish under the Affordable Care Act. Numbers would drastically go down. The insurance industry would be destroyed, etc. And when in fact it did not happen. Their numbers were improved. There are more people in health care today than there were before the passage of Obamacare. Quantitative easing, it should stop immediately. Charlie Munger talks about that and the choices that the quote-unquote the Congress had. They weren't very good. And for those of us that looked upon with contempt bailouts of the banking industry, but understand that it was necessary. Why was it necessary? Because this banking industry, these big banks, financial operators, etc., were so intertwined with the American economy. Had these characters went down, the large banks, brokerage house, etc., the whole economy would have went down. In other words, Goldman Sachs and the Main Street people would have all went down at the same time. And we did not have, the U.S. Government did not have the capacity to save all of those. The example would have been the automobile industry. If not for the policies of President Obama, the automobile industry would have sunk. And that would have meant the whole supply mechanism. Would all automobile manufacturers went out of business? No. But that supply system would have been destroyed. The so-called Motor City economy would have been destroyed. And how would you rebuild it? That would have been a problem with all these people driving Chrysler, Ford, cars, etc. around. There would have not been parts to repair them. Dealerships disappeared. They disappeared anyway, right and left. So thus, they did that. Whereas the other candidate, we don't get too much into politics here, but Willard Romney said, well, let the natural forces take it. Would not have happened in extraordinary times. As Charlie, you'll hear from him on this quantitative easing, something that had not been done before, where the Fed bought up a bunch of equities, literally, and private equities. That was the reason for buying those up was to take them off of the market. And now they're winding that down. So this is one of the things that's happening here. The modern industrial capitalist nations have all changed over the years. In Britain, the latest rendition of the conservative Prime Minister May's plan has been rejected. What will happen because of Brexit? A big question mark. On Friday, the Trump administration signed the extension of the federal government to September. That's the end of the fiscal year. What will happen there, we don't know. There are a lot of ifs we don't know. We'll go over the border plan in a minute here, but it has very little to do with it. Financial markets, according to this article, recovered from the sell-off January 8th through 14th. Economists polled showed a cut to the growth. There is a lot of uncertainty, and there is some good reason to forecast a slowdown in 18 as compared. And this is Jim O'Sullivan, chief economist at High Frequency Economics. So the Chinese trade pack is out there. The medium probability of a recession in the next year rose at 25% from 20%. It held at 40% over the next 2 years, although most pessimistic, was at 75%. Well, we see a very, very good chance of some type of economic downturn this year and over the next year or so. And it goes on to say a couple of economists polled the Fed to keep rates at 1.2 to 2.25% to 2.5% at their March meeting. Well, if that happens, that's a signal that things are not going very well. Of the 51 of the 102 economists polled, so the bank will take the funds rate next quarter something over 70%. Answered an additional question would not be a mistake. Well, a lot of that will depend. Although the job market is holding basically where it is, 3.9%, 3.10%, whatever. Inflation, particularly in food prices, that affects ordinary people, is going up. The thing that keeps the inflation rate down is the price of petrol, the price of gasoline. That's a totally different situation there. In light of some weak economic data and comments from the Fed chair, we need to scale back our forecast on Fed tightening. Inflationary pressures remain very subtle. A number of so-called cross-currents in headwinds are still important risks, and a lot of the issues are resolved. We largely delayed right up to December. Well, that in itself is pure flummery. To the shell people here, I always call that the shell people. I'm not sure why. Anyway, during occurred by producers in the large U.S. Shale fields will continue until transportation bottlenecks they have those are taken care of. The price of crude, that is from the West Texas Permian Basin, New Mexico, fell sharply last week, settling well below the $18 benchmark price. A lack of pipeline capacity on Wednesday. Regional price of crude was at $1.10 premium there, and we won't go into the various characters listed here, but out in Midland, Texas, there aren't as many drilling dollars available, no doubt about that, because of the glut that's out there. Executives say recent strengthening of regional crude prices suggests that producers can expect oil solid at Midland, Texas to slip from the current premium of $1 to $3 a barrel. Thus, with investors insisting on free cash flow and dividends, maybe they want what's happening here. Anyway, the oil industry can easily meet the U.S. Energy Information's oil producers' forecasts over the next 2 years and still reward production growth. That is from founder of Market Intelligence, a provider Drilling Info. That's a new one out there, but there's a lot of these out there that we thought we'd just throw it up here anyway. Let's get to DJ Trump's little wall plan here. Oh, yeah. Anyway, the administration says it's going to pay for 238 miles of wall with a total funding of $8 billion. Part of the money, $1.38 billion, was already okayed by Congress, and that signed on Friday. It's only 55 miles of physical barrier. $3.6 million that would come from military construction money. According to the White House, this is actually only part of the funding plan that requires a national emergency. $2.5 billion from the Defense Department's Drug and Addiction Program that covers counter-drug activities. and is largely used in activities along the southwest border. Current law allows the administration to tap that $600 million from the Treasury Department's drug forfeiture program. This can also be accessed with existing authorities. So this is basically where the money is coming from. And to the the producer price index, final demand edged down, and this incident was released on Thursday, the 14th of February, down to 1/10% in January, seasonally adjusted. This is from the Bureau of Labor Statistics reported. Final demand price fell 1/10% in December, inching up 1/10% in November. And the final demand index advanced to 2% for the 12 months. In January, the decline in the final demand index can be traced to a 0.8% decrease in prices for final demand goods, in contrast to an index of final demand services increased to 0.3%. The index for final demand less food and trade services rose 0.2% in January, following no change in December. 12 months ending in January, final price demand less food was up 2.5%. And I think we'll go ahead and impinge this particular one. This is 12-month changes in final demand price index, and it was a negative 1/10. Final demand, less food and energy. There was nothing there. So everything. This was in December, and in January it was a negative 1/10% there. Final demand, less food, 0.2% there. So pretty much tells you where things are. The index for processed goods for intermediate demand moved down 1.4% in January, the largest decline since the 1.4% in September 2015. 80%, over 80% of January's decrease can be traced to processed energy goods, while a decline of 6.5%, which declined, 6.5%. The index for processed materials, less food and energy, fell 0.3%. In contrast, the prices for processed food rose actually 0.5% for 12 months ending in January. The index for processed goods increased 0.9. This is where inflation does come up here. Product detail, over 1/3 of the demand in declines, in the index for processed goods for intermediate demand can be attributed to the price of diesel fuel, which dropped 13.7%. The index for utilities, natural gas, organic chemicals, gasoline, plastic resins and materials, jet fuel also moved lower. Conversely, prices for processed poultry, in other words chickens, rose 6.9%. The index for semi-finished steel mill products and asphalt also advanced. On processed goods for intermediate demand, I think we'll give a little bit of this. Leading for unprocessed energy fell 19%. The index for unprocessed non-food materials, less energy, decreased 1.9%. Prices for unprocessed foodstuff and feedstuff moved down 0.5%. For 12 months ending in January, the index for unprocessed goods for intermediate demand fell 3.1%. The largest drop since the 4.4% decline for 12 months ending in 2016. The index for crude oil, petroleum, this is kind of strange here. Fresh fruits, melons, and iron and strap fresh fruits except potatoes. Ungraded chicken eggs also moved lower. In contrast, for prices for slaughtered poultry, it climbed 9.4%. Index for coal and construction sand and gravel also rose. A very, very strange combination of things. For services, index for services moved up 0.2% in January. 2/3 of the broad-based advance can be attributed for margins for trade services, rose 0.7%. Prices for services, less transportation and warehousing, edged up 0.1%. For 12 months ending in January, the index for services increased 2.9%. Half the rise in index for services can be traced to machine and equipment parts and wholesaling, which advanced 2.2%. Indexes for business loans or partial services related to security brokerages, dealing partially chemicals, temporary health services, legal services also moved higher. Conversely, prices of portfolio managers fell 5.2%, and index for administrative general management consulting services for paper also declined, and wholesaling. It's interesting how they put all these things in together, but the index for stage 4 intermediate demand moved down 0.2% in January after edging up 0.1% in December. I won't go into some of these others because of the way that they some recalculations also involved here. We won't go into those. Weights for most commodity groups on the producer price index, as well weights for commodity base aggregate indexes calculated from commodity groups. Well, anyway, how they arrived at, you can read that later. Producer price index percentage change for final demand. A lot of it here in these finished goods, if you want to look at it and haven't had a chance to look at it as of yet. And a lot of this information for the general audience would not be here, but nonetheless, we will place it here so you can look at it. Let's go to the BBC, and there we will do the numbers. Big headline here: community that rejected Amazon. This is Long Island City. They did reject it. What's pointing to is a new way of looking at things. Many states, localities have put together these so-called incentive packages. Does this signal an end of incentive packages? Well, no, but what is happening here to sort of amplify what Charlie Munger is saying, there is a change in how people look at things, such as even having rich people around. Well, they can be around, but the taxation policies in California and various other places are tailored towards the population as a whole, not the wealthy. Now, some states that have no income tax, like Florida and Texas, well, they have no income tax. He didn't mention Texas, but he did mention, say, Florida. Well, but their policies are different. Their whole situation is different. What happens in those states, however, is because of their tax bases, or tax base, I should say, their ability to deliver healthcare services, education, etc., can be strapped. Now, do people move to those areas? Well, some do, some don't. That's the relocation there is a little bit different. But from looking at Lake City, that area, they'd already had a boom in apartments, which is happening in a lot of cities, boroughs of New York. So nothing new there. Even Chinatown, and the people, I've looked at this before, more than 8,000 apartments have opened in the neighborhood since 2000. That's a lot of apartments, and expected to add another 10,000 by next year. This is in Lake City. That's a lot of apartments. Now that is without the Amazon situation, because people are moving there. And whatever they're going to reap, as much as $27 billion in new tax revenue could be used to upgrade the neighborhood's parks. Well, those parks will be upgraded by the citizens that move in to the area. So it depends, obviously, on a lot of communities. That is not a necessity to have an Amazon of the world or whomever else come into the community and offer these so-called jobs at a risk to the community itself. In fact, Amazon has said that it will not increase its footprint in Seattle to more than what it is, period. UK sales, I guess we'll get this quickly and we'll do the numbers, bounced back in January. Well, that's because of a lot of 50% off deals. The Office of National Statistics said the amount of sales and goods rose 1% compared with a year ago. Retail sales were up 4.2% higher in January. That was the biggest annual raise since December of 2016. Clothing prices, that's the same in the U.S., fell by the most since 2016. Some of the retail sales here will go to the Bureau of National Statistics. This is in the UK, incidentally. And retail sales here. And the major talking points, we'll just go over these. In the 3 months to January 2019, the quarterly bought increased by 0.7% when compared with the previous 3 months. The monthly growth in quarterly bought increased by 1% in January 19, following a decline of 0.7% in December. Year-over-year growth in the quarter bought is sales in January 2019 was 4.2%, the highest since December of 2016, while year-over-year store prices slowed to 0.4%, the lowest price increase since November of 2016. Quarterly bought in textiles, clothing and footwear stores showed strong year-over-year growth of 5.5%. In stores taking advantage of January sales, a year-over-year price fell 0.9%. Food stores price experienced a general slowdown throughout 2018. The quarterly bought in January returned to strong growth experienced in the summer months at 3.2%. Online sales, total all retailing decreased 18% in January 2019 from a reported 19.9% in December of 2018. Let me go back here, and we're going to do the numbers now. We'll just do them from the BBC while we are here. In the UK, the FTSE was at 0.55%. That's the FTSE 100. In Amsterdam, they're at the percentage at 1.01%. In France, they were at 1.79%. The DAC in Germany was at 1.89%. The Euro Stas at 1.8%, and in Madrid they were at 1.91%. And if we go to Bombay, they were down 0.19%. Hang Seng was also down 1.87%, and the Nikkei was down 1.13%. The Dow, where are they, was at 1.74%, and the Nasdaq at 0.61%, and in Chicago they were at 1.19%. And let's see here. Whoops. Get to our commodities. Brent crude was up at 2.60%. That would be at $69.25. The West Texas crude was at $55.59. T-Bill Picking is still jumping for joy. And on the Forex, gold was at $1,318. That is a 0.95% there. And that is what we have there for them. And let me get back here over at Market Watch here and see if they have something that we miss. They usually do. And let's see if we can get to Europe here. Probably the same, the same figures here. Everybody is the same these days. Hang Seng, we gave the Hang Seng here. Hang Seng was down 1.87. This is from Market Watch in Shanghai. They were down 1.37. The Sunix was down 0.19%, and in Singapore they were down 0.14% there. And let's see, what else can we I guess that's all we can conjure up, as they say here. If we go, well, we're not conjuring up anything here. Now we'll go to Latin America here. Well, we're not getting the graphics we wanted to get. Anyway, we'll have to do it a little bit later here than on that. Anyway, this will do it for us on the 17th of February 2019 from WBRN Radio and on the Bostonred Network. This is the Numbers Man section. This week in economics, we already talked about the consumer keeping the eye on the prize. For those in business, make it a productive week. And for the consumer, Payless Source is one of the places to go. You'll also have other retailers that are winding down. There's a long list of those that are winding down their inventory, going out of business. The Sears franchise had been saved for the time being here. And one final note, Charlie Munger talking about Amazon. Well, Amazon we looked at with two different things. Incidentally, we're going to start a new show on IT economics. I'm not sure what the title of it will be. We used to do this. In fact, we started out actually doing it, and then we went more to macroeconomics. We're going to talk about IT. Amazon, a big, huge marketplace. Yes, they are that. But more and more of the revenue from Amazon is at Amazon Services. Now that is a quote-unquote cloud part of Amazon. It's getting bigger and bigger and bigger because more people are moving to the cloud. So you have these cloud behemoths there. Google is in the act. Azure, which is Microsoft, is in the act of cloud computing. IBM bought Red Hat. We have an open source report coming this week, and we'll be talking about Red Hat, where Red Hat is going. Warren Buffett bought Red Hat, got rid of Oracle, because more and more people are moving to the cloud. And what that basically means is the commodification of data centers. And more data centers will be in the cloud, wherever those cloud data centers will be located. software as a service, hardware as a service. Those things are out there, but what's the projection for those? What's the projection for Amazon and these buy local movements? On one of our shows, we're going to start looking at buy local. That's what we saw with Lake City. More and more communities are looking at sustainable development. We've talked about that in the past. To have sustainable development, you have to have local or regional development. You just cannot just have job growth. Job growth is important, but job growth at what price? That was the decision that they made in Queens, that they would have sustainable development in their community and not necessarily just add 25,000 jobs there, and at the same time the cost of destroying some of the equilibrium of their community. Yes, they would, the state of New York would have received more tax benefit, but also at the same time they had to ante up $3 billion in advance. Those things are becoming under scrutiny now. Obviously, businesses that move to the Texas, the Tennessees, to the Floridas of the situation, look at that. But you're also having increased damage in at least parts of Texas, definitely in Florida, from quote-unquote quote climate change, hurricanes, tornadoes, etc. In California, wildfires. You have the Arctic vortex in some areas. All those things are being now calculated in how you determine what growth is. Good day.
If the world is ever going to get is past, there'll be opportunities in the future. There are times that are easier and there are times which are harder.
So is right now tougher just because valuations have come up so much?
Of course.
So you think
A, the valuations have come up, and B, the competition sorting through those opportunities is more intelligent and more aggressive and more numerous. Of course it's harder.
Do you think that the
net result is people are going to get worse results?
Do you think that the number of people who are smarter, who have better information than they used to, that will go down, or it will just be a question of valuations coming down at some point?
Well, I think valuations will go up and down because they always have. And I think we'll have smart people in this game forever. Lots of them. The opportunities that we all remember came from a demoralized period when about 90% of the natural stock buyers got very discouraged with stocks. That's what created the opportunity for these fabulous records that my generation had. And that was a rare opportunity that came to a rare group of people, of whom I was one, and Warren was another.
So you're talking
and people who start now have a much less, they have lower opportunity.
Do you think we saw a generational low after 2008, beginning of 2009?
Generational, maybe. Yeah, I don't think the Bank of America is going to be cheaper.
Do you think
it was then? Yes, it was low. There were huge opportunities then.
What about just back around December, Christmas Eve, prices were down 20% and further for a lot of stocks?
Well, I don't follow the details and don't remember the exact days that are. I know that when the Daily Journal bought those bank stocks, it was basically the low tick.
Right.
That was an accident. I deserve no credit for that.
Well, you deserve some credit.
No, well, but the exact perfect timing was an accident.
What about the lack of volatility that we've seen in the markets? That's also kind of, as central banks got into the game and increased liquidity.
Well, of course, it's with all this massive central bank interference. I think that was necessary to do. In other words, I admire the politicians who did it and the technocrats, including the Federal Reserve people. And I think it was absolutely required, and that the danger they were avoiding was worse than the troubles they caused. So but it was very peculiar, and it did have the accidental effect of bailing out the rich in order to help the poor. And nobody was doing that because they loved the rich. They just didn't have any other tool in the kit, and they had to do something.
So the inequality that came from that...
It wasn't malevolence. Yeah. And it was an accident. And it probably won't happen again. And it's not a permanent conspiracy against the poor. It was an accident that we had the huge recession caused partly by massive stupidity in finance and venality. And then when we ran out of tools and had to do something really peculiar that we'd never done before, that was a wise thing to do given the amount of trouble we were in. You got to remember that if the trouble had been allowed to run, we might have had a revisitation of the kind of troubles that brought Hitler into power. So we were facing real difficulties. And both parties and our technocrats got together for the last time, I think, and worked us out of it. So it was a very admirable thing in which you can all be proud. I've been proud of nothing in politics since.
This leads me down so many roads.
That was a high moment.
There are all sorts of political proposals out there right now to try and solve that inequality that was created. Everything from a 70% tax on the highest brackets to a wealth tax to taxing stock buybacks or even preventing them. Do you think any of them work?
I don't think they have to destroy some inequality. It's probably going to go away by itself.
Why?
Well, I think we hit a peak of inequality because the authorities had no alternative but to print a lot of money. And of course, that bailed out asset values, but that was a fluke, and they can't really do more of it. They've played that game once as much as they really can, and so I don't think people who are worried about inequality should worry too much about a lot more of it from a lot more interest rate lowering.
We are still stuck with this populist fervor, though, and...
Yeah, sure, but that's as natural as breathing.
How do you think that plays out?
Well, I don't know. So far it's played out in waves. Mm-hmm. Sometimes the Democrats are in and sometimes the Republicans. In my lifetime, the country has run better net because we had two parties, each of which was partly in control. If either party had been totally in control of all branches of the government, I think we would be way worse off today.
You think there's room for a third
I
political
think
party?
By going back and forth with a lot of political tension, I think we got about the right amount of social safety net. It would have been evil not to have as much, and we probably couldn't afford a lot more.
Do you think there's room for a third political party, the way Howard Schultz is kind of stepping in, potentially?
Well, we got one in the time of Abraham Lincoln. It took a civil war to create it, but I think it's unlikely that we have. The last time we got a third-party movement, it just elected one of the two parties who otherwise would not have been elected.
You mean Ross Perot? Or are you going back?
Yes, I mean Ross Perot. Yeah. Ross Perot elected the Republicans that year.
Right. Are there any politicians you look at and admire?
Sure. But generally speaking, it's not a genre that is my favorite.
Who are the politicians you do admire? Who do you think has good ideas right now?
Well, I'm not ecstatic about anybody. If you ask me who performed pretty well recently, I'd say Mike Bloomberg.
You think he has a shot at winning the Democratic?
I don't know about that, but I think he was a pretty reasonable, able kind of a guy who's trying to do right.
You mean in his term as mayor of
New
York City?
Yeah, right.
What do you think, if you have not been thoroughly impressed by the political process since they came together to try and combat the Great Recession, what do you think about our political fortunes going from here. Do you worry, or is it something that you think will be
Well,
resolved?
I would prefer that the two parties hated each other less and that everyone was more rational. I don't like vast political excess and shouted epithets and so forth. I really do. But what can I do about it? I can be cheerful.
You touched a little on the national debt, which has just hit $22 trillion. You touched a little on that.
Yeah,
today.
we're in new territory, but it doesn't mean that it's crystal clear we can't get by what we've done. We just know we're in uncharted territory.
And you worry about the eventualities of a growing national debt?
Well, I don't worry much because I regard it as a cinch that a great nation will in due time be ruined. So it's just a question of time, and where is Rome, where is Britain in its heyday? They all pass, and so our turn is bound to come someday. But I don't like thinking about it too much. It's like my own death. Why should I enjoy thinking about it? But is it coming someday? Sure, of course it is.
But you have no guess as to when.
No,
sooner or later. You've been a huge booster of China's economies and some of the Chinese companies and the entrepreneurs who run them. We've gotten obviously into a little stickier situation with China with the trade talks that are going back and forth, and maybe a different relationship than we've been dealing with for the last 20 or 30 years. What do you think about China right now and its future?
Well,
prospects?
I think it's natural to have some tension over. The truth of the matter is that Ricardo, when he invented the law of comparative advantage, did not predict that someday the law of comparative advantage would greatly accelerate the growth of some poor nation which had a particularly able populace, like China. Free trade would enable them to come up rapidly and take a lot of power away from the companies that had been on top and liked being on top. He just didn't think about it. Once we realized it could happen, I don't think it's crazy to think there may be some limit to the amount of destruction we want to occur in our aerospace industry or something. Right. So I don't regard free trade as such a pure thing that we could never, under any circumstances, intervene. And I think that the advantages to the United States and China to getting along are so great on both sides that I anticipate that they will reach some tolerable adjustment.
Do you think the president's right to raise the questions about whether free trade is really free trade and open trade and fair to both sides?
I don't consider wrong to have some limits on free trade that matter to the United States. I don't want many. I don't want them to be huge. But some limits on the operation of free trade are quite acceptable.
Have you changed your perspective on Chinese investments to this point based on this trade talks or based on the new relationship we may have going forward?
I basically believe in the law of trade because I want two countries with a lot of hydrogen bombs to be trading happily with one another instead of posturing the way we are with Russia. Mm-hmm. So I vastly prefer our relations with China to our relations with Russia. And I think China thinks likewise. And I anticipate that we will get along. It will be crazy on both sides if the United States and China don't. If there's any one country both sides should want to keep friendly, it's the other.
You know, you bring up nuclear power or nuclear bombs, and I just wonder what worries you the most in the arsenal of things that could go wrong. Is it nuclear bombs? Is it artificial intelligence? Is it?
No, it's a nuclear war. A nuclear war would be a real disaster. Global warming is something we could cope with if we had to, but a nuclear war that is really serious.
You point to our relationship with Russia. Obviously, we have the situation with North Korea.
I'm all for making the Russian relationship better, too.
How?
Well, that's difficult, but you've got to work at it. I don't think the right way to handle every tough guy that's fighting against you is with unlimited hostility. There are times, I think, when they ought to be killed with kindness, even if they're wrong.
Is that emphasis on killed or emphasis on kindness?
I think kindness. There are worse things in the world when you're rich and powerful than giving a little for the peace of the world.
Your concerns about that, where would you rate it? Because obviously this is something you've thought about for a long time and watched for a long time. Are you less worried or more worried than you were 10 years, 20 years ago, 40 years ago about that situation?
I don't think since the day they invented the hydrogen bomb, I've had a moment when I didn't think that mankind's main problem was avoiding a modern war using hydrogen bombs. It's a very serious problem.
Charlie, can I ask you about some news of the day today? While you were in your board meeting and then with the shareholders, there was news out that Amazon was actually pulling its headquarters bid for New York City. And I don't know how closely you followed that, but it's certainly an interesting study when you start looking at how much states and municipalities should be doing to woo corporate investments, and when or if there's a time where it's giving too much, or if they're standing up and they've just lost a potential for a huge investment.
Well, of course, we've had states doing this kind of thing for a long, long time. And by and large, the states that have done it have been wise to do it.
The states that have wooed companies.
Yes. It's been smart of them to woo outside companies to come in. And of course, it will go in time to wretched excess. That's our system. No, I don't worry too much about it. And my attitude toward Amazon is it's an utter phenomenon of nature. I mean, it's hardly ever been anything like it in the history of our country. And very talented, driven people. And I would not have predicted the success that happened. And now that it's happened, I wouldn't want to predict that it was going to stop either. I think it may run a long way.
Just back to the idea of whether New York created a big problem for itself. I was just thinking about it in terms of the new tax laws that are there. And the blue states, the SALT states, have lost a lot in the new tax legislation. It's basically punishment from the government for having such high local taxes because you can no longer deduct those on a federal level. So New York's going to get hit with that. You combine that with the idea that it's not going to be not just only wooing Amazon, but what message that may send to the broader business community. Could a state like New York or someone in the Northeast region really have shot themselves in the foot with a double whammy?
There are a number of places that have shot themselves in the foot. Connecticut, California, New York City. It's been serious. And driving the rich people out is pretty dumb if you're a state or a city. And the idea that you're going to help New York by driving the rich people out, of course it hurts New York. And of course it hurt Connecticut. The idea of that beautiful real estate in Connecticut, down 50% in value, they've driven out all the rich people. And California is doing the same thing. I know a lot of rich people who left California. I think it's really stupid for a state to drive the rich people out. They're old. They keep your hospitals busy. They don't burden your schools, the police department, your prisons. They give a lot. Who wouldn't want rich people? I think Florida and Hawaii have both been very smart in the way they've recruited rich people. And I think Connecticut and California have been stupid.
Do you think the country risks some of those same stupid policies if you tax?
Well, some of the people in California are so anti-growth, they like driving the rich people out. That's not my view, but you can understand why some people think that way.
Let's go back to Amazon and the growth that you've seen there. I know in the past that you've
Well,
said...
it's incredible what they've done.
Yeah, and you've called Bezos ferociously smart.
Yes.
What do you think about the prospects for Amazon longer term? There are some movements in Washington that push back against him, whether it's because he's the owner of the Washington Post or whether it's just one company getting too big and regulators worrying about that.
My guess is he still has a long ways to go. Up.
You're a lawyer, too.
Was.
Well, once a lawyer, always a lawyer, correct?
Not really. That's a long time ago.
What do you think about his move that he's made recently with the owner of the National Enquirer to say, look, he just came out and said, they're blackmailing me. They're extorting me.
Well, I admire people who simply confront problems head on. So I have no quarrel with his confronting the National Enquirer, but I regard it as a little nothing place that the world could well do without. And so, and to the extent they behave badly, and he's objecting vigorously, I'm all for it.
Let's talk about bad behavior in business, because I think of you sometimes as the high priest, somebody who looks around and lauds good behavior, but also calls out bad behavior where you see it. What do you think some of the worst behaviors are in business today?
Well, I think the behavior of the mortgage and banking industry in the delusional prosperity that preceded the great real estate bust was obscene, practically everywhere. And I think that the people who got into a lot of the trouble richly deserved it. And I think they didn't get enough. If God were just, there would have been more penalties. They were bailed out to some extent because the country had to do it. But it never should have been allowed to run. All that disgusting lying and cheating and delusional assumptions, and it was just, we all would consider it totally illicit and awful to adulterate the baby food to make more money, to an extent where the babies died. And they were doing pretty much the same thing with their basic product. They were adulterating it so badly that it threatened the whole welfare of the republic. This was deeply evil. It's one of the things Elizabeth Warren is really right about.
And you don't agree with her on much.
That's true, but I agree with her on that.
Is that behavior still taking place, or you think it's been put to
Well,
halt?
it's attenuated, thank God. But is there still some craziness in finance? Of course, there always will be. But it's way better.
Anything that rises to your radar screen now that may be under the radar for other people?
Well, nobody knows how much of this money printing we can do. And of course, we have politicians who and they're in both parties, who like to believe that it doesn't matter how much you do. We can ignore the whole subject and just print money as convenient. Well, that's the way the Roman Empire behaved, and it was ruined. That's the way the Weimar Republic was ruined. There is a point where it's dangerous. And of course, my attitude when something is big and dangerous is to stay a long way away from it. Other people want to come as close as possible without going in. That's too tricky for me. I don't like it.
In terms of possibly getting sucked up into it?
Yes. If there's a big whirlpool in the river, I stay a long way away from it. There were a bunch of canoeists once that tried to run the Aran Rapids. I think they were from Scandinavia. And the fact that the whirlpools were so big made them very eager to tackle this huge challenge. The death rate was 100%. I regard that as a normal result.
Bill and Melinda Gates put out their annual letter this week, too. And in it, they had a list of a number of things that have caught them by surprise. Things they learned that they didn't see coming. One of them, I think, was that toilets haven't really changed in the last 100 years. Another was
they have. As a matter of fact, the Japanese made the openings bigger. And what you want to go away goes away better. They have changed. They're way better. I don't think they pay enough attention to their toilets.
Same basic
They haven't
construct,
noticed.
though.
See, they increased the size of the hole without telling them.
It does wash away more waste with less water. I will give you that.
But it takes away more waste.
Takes away more with less.
Faster, better.
They had a list of things. Some is that data can be sexist. Obviously, whoever's programming stuff puts it in. Another is that DNA tests can actually catch serial killers.
Well, that has been a pleasant change.
Catching serial killers.
Yes.
Yeah. I would agree. I use this, though, as a way of just getting into things that may have caught you by surprise. Is there anything recently that really caught you off guard or that snuck up on you?
I was surprised when central banks started. They hadn't done that previously in my lifetime, at least not in a big way, and they did it massively. And it seems to have worked considerably. And that surprised me. And by the way, it surprised the whole economics profession. If you read the textbooks on economics, nobody was predicting that this would be the logical response.
We're not out of it yet, though.
No, of course not. You're never out of it until you're dead.
Do you think we can call it a success without seeing quantitative easing wrapped up, the big balance sheets kind of wound down, or you think we've come far enough out of it to say this worked?
Well, all human successes are successes so far, and this is a success so far, and we don't know for sure what the ultimate consequences would be. In the old days, when people thought the currency should be backed with gold, and they wanted the inflation rate to be zero and the social safety net to be almost zero, they created a lot of GDP growth and a lot of prosperity, but with horrible recessions. And to some extent, the recessions automatically cured themselves. When we got into the business of big interventions, driven by the example of the Great Depression, what we got is pretty much a century of extreme prosperity with relatively minor recessions. But we're using methods that are so extreme that maybe we can't use a lot more of them. And we don't know the answer to that. If an economist told me he knew the answer to that, I wouldn't believe him. Mm-hmm. Either way, it wouldn't matter which way his opinion was. I just think we don't know.
Is that because that question's too hard, or you just don't trust economists in general?
Well, the reason the economists are wrong is because it's so hard. Yeah. You know, the Greek philosopher who said, a man never steps into the same river twice. You know, the man is different, and so is the river when he goes in the second time. That's the trouble with economics. It's not like physics. The same damn recipe done at a different time gets a different result. Right. And I don't think the economics profession, I think they're gradually coming to that recognition, but it makes their subject harder, not more easy. And they weren't handling it so perfectly even when they thought it was easier. So of course it's hard for them.
And Charlie,
why would anybody think they know exactly? Take Japan's present position. Yeah. Can Japan double its national debt just because it feels like it from here? I don't know. I don't know.
Charlie, so many of the people who come here come because they're looking for advice not on business or investments as much as they're looking for just advice on life. There were a lot of questions today, people trying to figure out what the secret to life is, to a long and happy life. And I just wonder if you were...
Now that is easy because it's so simple.
What is it?
You don't have a lot of envy, you don't have a lot of resentment, you don't overspend your income, you stay cheerful in spite of your troubles, you deal with reliable people, and you do what you're supposed to do. And all these simple rules work so well to make your life better, and they're so trite.
How old were you when you figured this out?
About 7. I could tell that some of my older people were a little bonkers. I've always been able to recognize when other people were a little bonkers. And it helped me because there's so much irrationality in the world, and I've been thinking about it for a long time. Its causes and its preventions and so forth. Sure, it's helped me. And staying cheerful because it's the wise thing to do. Is that so hard? And can you be cheerful when you're absolutely mired in deep hatred and resentment? Of course you can't. So why would you take it on?
Is there any advice you would go back and give your 20-year-old self?
I have not. Many of my children have worked out well, and I've had very little to do with it. I think they come into the world to a certain extent pre-made, and you just sit there and watch. I don't think they're... It's been simply amazing to me as a parent to note how much is sort of preordained. Mm-hmm. The shy baby is a shy adult. The booming, obnoxious, domineering baby is the booming, domineering, obnoxious adult. I have never found a way to fix that. I can be cheerful about it, but I can't fix it. I can change my reaction, but I can't change the outcome.
Well, Charlie, I want to thank you so much for your time today. It's really been a pleasure being here.
Well, I'm glad to be here. You know, I seem to have a whole group of people in India and China that like me. Now, that's pretty much my whole favorable constituency. But it's more than a lot of other people have. And so I'm thankful for what I have.
And we are thankful for having you here.
Right.
Thank you.